The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, this early hour, 8 a.m., recording the show for noon. And, of course, noon to 1 p.m. The Fed still hasn't made any statement. It'll be a little later than that. It'll be 2 o'clock to 2:40. I think they have a little conference as well. So what's really interesting here is that we've got a whole bunch of things setting up that says, you know what? We could, in fact, have a little bit of a pullback here. Let me go through this one at a time. The E-mini is down 1, considering that it was down to 26.59 yesterday. And this is the March contract. It was down about 5-6 points lower. It's come back quite nicely. It's down at 26.67. And what's really important is you can look. I'm going to make this much wider. I suspect that there's going to be a meandering market, not too much up and not too much down, all the way through until the Fed speak. When the Fed speaks, I think a couple of things are going to happen, but let's just go through this one at a time. You see this bowl formation like a cup, but it's more like a bowl, and you've got a high of 2667.25 in the March 2018 E-mini, and then it comes back, it comes down, sort of makes a low, tries to rally, makes a little arch formation, doesn't test the left side low, continues up, walks the 9-period exponential moving average. Remember on Friday, I'd said that on Friday we spent a lot of time talking about these different moving averages, especially the 9, what it means, how you can walk the 9-period moving average, and all of a sudden it goes to another peak D. So this is Chapman Wave instant restart right here, just very momentary at 26.55. Goes to 26.25. So what we have right now is a setup that says another little mini cup formation with 26.73 as strong resistance and 26.59 as support. All right, let's get out of this and we'll start doing the real thing. Within the context of the markets, one of the reasons why I wouldn't be surprised if we start a very choppy consolidation phase right now, maybe slightly higher highs, but basically keep coming back towards this 24,500, 24,400, even maybe 350 level over the next week or so. Here's the reason. If you look at the E-mini daily, you'll see that the MACD is strong. The moving average convergence is strong. Stochastic at 90% is strong. So that's giving you support. At the same time, when you're looking at the smaller the time frames, like the 120, you're starting to reach some kind of an overbought level. So that says to me, yep, unless there's something really special that happens sometime between 2:40 this afternoon and 3 o'clock Eastern time that says, hey, this is spectacular action. The market is now going to go really quickly towards the 25,000 level. I think that so many stocks are in an area that says we've done very well. We need a little time out to take a breather to be able to continue higher. So let me show you what I'm looking at. For the moment, I'm just going to go to the continuous contract of the YM, the Dow. So you made a high on the futures, the continuous contract at 24,549. On the 4th, you pull back, hit the 9-period moving average, and what do? We go to 24,575. So you've gone about 30 points higher. So this is an E. I can't make it a brand new A. This has to be an E, and maybe we'll have to get to an F. And then, so it says to me that we get a little toppy in the lettering in the Chapman wave. But what's really important is the fact that we've gone higher than the doji candle in the weekly chart of last week. It says if there is, this is real simple, if there is a close on Friday above last week's high of 24,549 in the Dow futures, the Dow itself, and of course this is being done 1.5 hours before the market opens, 4 hours before I usually do my show, and that says, look, there's nothing wrong with the chart formation right now, other than in terms of my Chapman wave lettering, getting to an E says, yeah, maybe you can go to F, but probably you're going to start a consolidation, and says that this is the rectangle right here that you probably have to be aware of. And that says that 24,100 is support, 24,500s are making the whole 500s, could be resistance. And then chop, 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 we just chop around for a little while. So that the market has a potential, a market that survives the September-October period. In this case, you didn't have a smash to the downside, but whenever it does, usually closes the year close to or at an all-time high. And that's kind of, I'm keeping that theory here. So as I'm looking at this, I'm saying, okay, the Dow has maybe limited upside, but at this point, because of the MACD and stochastic, it says so far, maybe a limited downside. The weekly chart says, I'm getting a little stretched. I could do with a pullback. I could do it with a pullback of 400, 500 points. It doesn't have to be more than that at this particular point. Wait a minute. Let's go to the S&P. The S&P right now is just testing the inside track resistance, gone above it. We went to an all-time high yesterday of 26,609.72. And here again, it says, this is really good action. The MACD is good. Like the Dow, stochastic's good, but not great. And it says it's a kind of a mixed signal. And it says, you know what? There's a good chance we're going to be chopping into the area of the 2630s, maybe even 2620s over the coming week, but not yet a breakdown is what it's showing. Let's go to the QQQ. The NDX 100 hasn't taken out the high of 156.69, the high of the 28th of November, but it has formed a cup formation. What really is interesting is that the semiconductors that led the way for the whole market, let alone just the Qs, on the way up and down all the way through the year, has been failing miserably. 105.83 double top, two consecutive sessions with that high, gave a Chapman wave 2-bar reversal, and it gapped down. It actually turns out to be an island reversal at the top. And now we're in the 97s. I would love to see a bounce. At some point, there's going to be an oversold bounce. People are going to say, hey, I'm coming back to these guys. I've had a bit too much of a rest. I don't think it makes a new high this year. In fact, I think the semiconductor index is in a little bit of trouble. We'll come back. We'll look at crude oil. We'll look at bonds. We'll look at gold. We'll look at the dollar. Crude oil is up 43 cents. Chop, chop, chop. Here it is. Up in the higher range, not breaking down, not breaking out. And that's what I think crude oil is doing, chopping the upper range. I'll be right back. Basil Chapman. Dow futures are up 11 in the Dow. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. resistance. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back, and remember this is pre-market opening. The show will be taped and recorded for rebroadcast at my usual noontime hour. So the GBTC, and this is so fascinating, to have a vehicle that trades only at 9:30 in the morning Eastern time till 4 p.m. when in those other hours it has a whole life cycle of moves that can exceed 20-25%. It's just ridiculous. How do you own something like this unless you buy it and you say, I'm just holding it? I don't care. I don't care where it goes. I don't care what happens. I'm just holding it. Well, that means you're going to pay $2,270 for GBTC. This is the Bitcoin Investment Trust. So it made a pattern. In fact, this is funny because on Friday during the webinar, I was discussing this and I showed this pattern. So what we're looking at here is that there's a pattern with the oval formation. In the Chapman wave, that can be a halfway marker. It's a pattern that I call the propeller shaft, where you've got the blade going here. You've got the fulcrum in the middle there, and then you've got an equal amount to the upside. Normally, I talk about it if it's a very oval pattern. I talk about it as the Chapman wave pattern. The Chapman wave pattern, just real quickly, let me show you something right here in the Dow. This is still the neck formation. It's unbelievable that the neck formation has been continuing since the summer of 2016. Here it is. This is the pattern that I like to talk about. And here it is. This is the oval body, and we're in the neck part of the stalk leg. It looks like a stalk. That's the only reason why I call it that. And now let's go back to Bitcoin GBTC, not Bitcoin. This is the Bitcoin Investment Trust. Now, of course, you've got spin-offs. So now all of a sudden the media is starting to talk about this as if it's a mania. Well, it is a mania. To my eye, having been through the NASDAQ back in 1990s, back going even to the 87 when the Dow stocks were in mania formation in the summer of 1987. This is nothing. This is just really the start. It isn't the mania. I'm not seeing it everywhere. I'm starting to see it, but not like I did before. Yes, to me, this is going to extract money as the Dow. The Dow didn't make its all-time high in 2000 like I thought it would, up in the 12,000, 14,000, even 17,000 area, because the NASDAQ usurped, grabbed all that money and took it and used it. And the money that would have normally, traditionally for 100 years, gone to the Dow, didn't go to the Dow. It went instead to the NASDAQ. Then in 2007, money that would have gone to the Dow kind of went to the Dow, but it really went. It had gone into the home builders. Now we're seeing money, one source, whereas before home builders is not a very big sector, but it's big enough to say it's a disparity where you can have 15, 20. Now you've got Bitcoin and you're getting spin-offs, Bitcoin Cash, Bitcoin Futures, but it's still Bitcoin. So it says to me that still has to break into other parts. So there's still time. I'm talking about time going months into 2018. But I think it's going to siphon off money that the millennials would have gone into the stock market. They have already. Now I think they're going to go into Bitcoin. When the crash comes, which inevitably will come, how they talked about the boomers. They said the boomers are going to leave. The boomers had real estate and stock market to build up portfolios. They're going to give to the next generation an unbelievable amount. We'll see about that when the time comes, because the boomers are also going to go into Bitcoin. I'm already hearing people, my friends, talking about Bitcoin, and one or two have started to get into Bitcoin. It's just the start. So, okay, let's get back to nitty-gritties. So now I want you to show you that gold, and that's, I think, part of the reason why the fancy with gold, trying to grab gold, it's not quite working here, because you've got another medium that's taking the money away. That's just the only reason why I think gold is not running as you should. You'd expect it after such a big look. There's a straight line here. Markets move either in a straight line, up or down, a cup formation, or an arch formation. To me, it's real simple. And this is a straight line. It hasn't changed yet. It should have yesterday. I don't know if it's going to be able to. So we'll see today. If the Fed raises rates, that might impact gold a little bit more. But wait a minute. It's the dollar. And we still remain along the dollar from the exact low after that. Look at this beautiful 70-week from May of 2016, 91.92. It screams up to 103.82. The week of January the 6th of 2017, comes back down 35 weeks up and exactly 35 weeks down with a Chapman wave inside wedge with an arch formation with an exact left side, right side price time match, and kaboom! It goes right there on the week of the 8th of September. That was the day of the low. That's where we went long, not expecting all that much, and it's still acting quite nicely. It's not great, believe me. It's not like the dollar is on fire. The dollar is moving up for other reasons, not just oversold from that huge move down. It's just other reasons right now. This is the chart we've got to focus on. Anytime over the next 3 months, if the dollar breaks 89 support, the 200-period moving average is at 89.66. If that takes it out, if the dollar takes it out, dollar's done for quite a while. But if the dollar moves up and is able to close in the 96.70s, it's a 94.08, 96.70s to about 97.58, somewhere around there, I think that the dollar is going to have a good first quarter. So that's the way I'm looking at it right now. And that would impact gold. And I'm thinking that gold is going to have a bigger move. Let me just show you something here. On the bigger time frame, look, this is my gold chart. And if I do a left side, right side price time match, we've made the Ictus low, that low with the doji candle in December of 2015. Chop, chop, chop. The H pattern, remember I always say the lowercase h pattern can go to a lowercase m pattern. That's exactly what you saw here. And then when it broke out, it was really positive. Remember, this is the pattern, lowercase h to a lowercase m, euro-dollar currency pair. When it finally turned up, it had a big move, and now it's consolidating that big move. So now think of the gold. And that's the reason why I think in the shorter term context, when you look at, I did this the other day, so let me see. Oh, I haven't got it. Pity. I was going to show gold core. I'd shown it to my, while we were doing the webinar the other day, how it just kept coming down. Look at this. Down, 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 straight line move. The arch formation broke that decisively. That's really not a good pattern. Now it could bounce, but I can only think of gold core, GG, at 11.80 up 2 cents. Bouncing more than anything else. I just don't see it starting a brand new move to the upside. So that's that. And I want you to look at, if we look at let me just go to this here. This is fascinating. So this is iShares Global Timber and Forestry ETF, Wood, W-O-O-D. And it has made I'm calling this a peak F top for now. I'll have to give it an alternate count if it breaks out above 70.95. But it is now having a little bit of a consolidation. The big thing here is that the HGX, the Philadelphia housing sector, the housing index, has made a peak E/B at 347.70 the week of the 11th of December. This is the first red candle we've had for a while. I think that the impact of this chart of yields is going to impact the home builders. That's my impression right now. But look at this. Look, we've got a leg D finally in the weekly chart of the 5-year. And look how close it is to the 10-year. 10-year is trying to break out as well. The 30-year is stuck. That is the divergence, a flattening of the yield curve. This is what you got to look. This is what might impact the market in January. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and this is a tape show. I'm doing it. It's now 8:30 in the morning. I don't know what news comes out at 8:30. Let's see what happens to the futures. So the Dow futures are up 7. I wouldn't be surprised during my show if the Dow futures are still just in a narrow range, and the S&P just waiting for the Fed. After the Fed, I've made it real clear to subscribers, if the Dow goes minus 35 to minus 45, then there's a good chance that we've started some kind of a consolidation. And if it's up 35 to plus 45, yep, the consolidation will keep going, but it'll be a high-level consolidation rather than kind of meandering down towards testing the Dow 24,400, 350 area. Okay, I mean, just trying to keep it as simple as possible. We were looking at this 30-year white chart, right? The background is black, but this white chart right here is the 30-year TYX, and it is down in the arch formation towards the lower end of the arch. The 10-year, the brown, the TNX, is trading at 23.89, 2.389, getting close to the high to break into leg C to the upside above 24 4.75 that was made back in October, that'll start leg C if it goes one tick above. The 5-year, I already drew this little circle here, and I said, hey, I've made a note for subscribers. I sent out a part of my newsletter one Saturday. I said, look at this pattern here, look at this pattern here, and we looked at what happened with the what happened with the stock market at a particular time. It's a little different scenario. It isn't apples to apples at all at this particular point. This is a leg D at a new recovery high in the 5-year. It's creating a situation that says, hey, watch this. We've been here before, but when it happened before, look, the 5-year was here, the 10-year was all the way up, 30-year was way up there. This is all much tighter. This, I think, is going to have a little bit more of a meaningful impact on the market. Doesn't have to happen right now, but it's a heads up, and it says all you need now is a couple of bad news events to infiltrate the overall dark cloud of the market, and then you'll start to see a market consolidation. And until that happens, market wants to ignore whatever it wants to ignore, that's fine. But this is just a heads up to say we're getting a lot of information, and I suspect that the first big break to the downside might occur when the Bitcoin actually has its first 45 to 55% decline that holds, not an intraday, but holds. Thank you, Peter. I appreciate that. Of course, I didn't even know about it until I got a call from the grandkids last night. So, all right, now let's do this. I wanted to look at the relationship of the euro to gold, how it's held so well. It's pulled back. It's in a high-level consolidation, and they often directionally move together, not in points, just directionally. And what's happening is that this H pattern in the euro-dollar currency pair in the weekly chart has a chance to retest at 1.175, the 1.164 area. If there's any weakness, if it takes out the low of yesterday, 1.171, closes under that, a good chance it's going to go lower. And look at this, the USD JPY, this is the yen, the dollar-yen currency pair, had a pullback from 113.74, straightening out 113.02. Doesn't sound like much, but it's a big red candle, testing the 9-period moving average. And it's got the weekly chart that says if there's going to be a V-shaped pattern rather than another arch, let me just draw this in, because a pattern that repeats tends to repeat over and over until it doesn't. And this particular chart says if there's a pullback to the 112 level in the next 3 days or 4 days, then you've got another arch formation. But for whatever reason, if there's a break above yesterday's high of 113.74, there's a good chance you've started leg C, and the next big thing will be to tackle the high that was made in the 6th of November at 114.72. And that's going to be very important. And that kind of corresponds with what we're looking at in the dollar. I'm a little behind on the dollar. I've got it unchanged at 94.04. Maybe it's down a fraction. I'm not sure. But this is what it is right now. As I said, about 10, 15 minutes, I think, delayed. But so for the patterns, look, it's got a potential Chapman wave squash that takes you to a C. Then the MACD flattens out. MACD continues higher, stochastic flattens out, and then it could go to a D. So this is a very important moment in the dollar's life cycle on a very short-term basis. The weekly chart is saying, hey, I'm making higher highs and higher lows. That's what you need to consider. Okay, I want to go to the TLT. The TLT trading at 126.75, up 37 cents, made a peak D in the Chapman wave, and it held, it got stopped right at a trend line. I love these trend lines. It's just great to take 2 points of contact. I go to the outer, usually the outer bars of a candle. That includes the wick and the lower bars, and that's how I draw them. And then I might have to use the body of the candle at some point, but my eye says go with the most hit and most obvious focal points. Look, there's the outer point that was made on the 8th of November at 126.80. There was the focal point that was made at 127.29 on the 21st of of November. Then it hit exactly on the 1st of December, 127.69. Boom, it just comes right back, hits it, pulls back, and then it spikes above, and then look at that containment area. It hasn't been able to break above. So this trend line is saying this is a really important trend line, because if there's a close above, it depends what day, 128.21, let's call it above 128.20s in the TLT, there's a good chance that yields will start coming down, not going up. If there is a break in the TLT by Friday's close, that says, oops, I'm under 125.23, the 200 period moving average, not really important. It's the close under this candle of the 30th, 124.44. It says, uh-oh, arch formation, yields are going to go in the 30-year, this is a 20-year T-bond, but in the 30-year and 20-year, much higher. So this is a very important period. Why did I mention the HGX? Because the Philadelphia Housing Sector Index made a peak F top. And in fact, I really don't have a choice. I could go higher, but I have to put the down arrow because the MACD and stochastic are very poor. It has closed under the 9-period moving average. It's there. It closed there yesterday. This is a very, look, there's that H pattern that I always talk about. Lowercase h, you come down. There's the back. Then you make a little pattern like this, little arch formation. Okay. So this is exactly what we're seeing. That's what we saw in the SMHs, the semiconductors. And that's saying this H pattern, if it closes underneath 335.58, you're at 339.41, the housing sector is finally going to have a pretty decent consolidation. If you look at Toll Brothers, one of the absolute leaders on the upside, made a peak D in the Chapman wave at 51.08 on the, whatever that is. Oh, that's the 12th. That's on the 4th of December. And here's that H pattern as well. I don't know. I've counted this umpteen ways, and I'm going to say A, B, C, D. Yeah, there could be, in fact, an alternate count. I've seen, patterns unfold in a certain way. I'm going to talk about the instant restart in Toll Brothers, trading at 47.09, because of the importance of it being repeated. This pattern has been repeated so many times in the weekly charts. I need to talk about it and say it's now become way more important than I thought. This could be, in fact, D and not a. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let's look at Toll Brothers. I want to show that Chapman Wave instant restart. You see this move right here that went to a peak. So what's this all about? In the Chapman Wave, we're always looking for 4 higher peaks. Peak D, look, this was a peak D right here in Toll Brothers back in August of 2016. And it pulled back quite sharply. Well, for that, this chart, it was quite sharply. And then it started a brand new one. Then it went to a peak D again on the week of the 21st of April of 2017, 37.37. Held the 9-period moving average. And what happened is it made a peak F, legitimate F, because there was a doji candle. I always look at that. That's very important at a potential top. Then the MACD went down very sharply and the stochastic went down very sharply. However, there's a rule of thumb that if after a D, the pullback, if it doesn't break the low that was made just after D, in this case 35.07, and then goes on, there is just a chance that you've actually started a new Chapman Wave instant restart that includes an overlapping wave. So then this goes to G/A, and then you can't go higher than a G. So that has to be a B. But wait a minute. If you go to that D, this E becomes E/A, F becomes F/B, that becomes G/C, and now you got your D. And that's what I've seen in so many charts. I don't argue with the chart formation. If that's what it does, that's how I developed all these techniques. I never ever in my life thought of something called an instant restart. It's just over hundreds and then thousands of charts. I suddenly found something happened after a quick D extends higher within 3 bars. And I developed a technique that said, hey, when you get to the G/C, it could recycle. And that's exactly what we've got. So I think there's a chance that Toll Brothers has actually made a D in a leg D in the weekly chart that has gone this week, if there's no new high, has gone to a peak D. And it's an E in the monthly and a D already confirmed in the daily. If I go to DHI, oh boy, is that right? Yeah, DHI, which is DR Horton, one of the very best home builders, huge leg D in the monthly chart, a peak D in the weekly chart, no questions about A, B, C, D, and a peak E with a rectangle formation forming. If trading at 50 round number right now, the 51.53 high, if that's not taken out within a week, by maybe Wednesday next week, but instead we've actually seen HDI close below the low of 49.70 made on the 1st of December, it says, uh-oh, time out for the home builders. And that's what I'm looking at. And that says, watch out, because that TLT could, in fact, have made a peak D. The one thing I really can't tell you about is the weekly chart has gone to a C. But underneath the Grand Canyon left side sharp, straight down move, the cliff hanger right there of the week, this is the week of November the 11th of 2016, opens at 130.75, plunges to 121s. Underneath that, yeah, you can fade it a C. If you're all-time highs, it's really unusual to do that. So I'm looking at this and I'm saying, and this Friday, last week we had the start of what I was looking at for all these to generate different signals and different indices. This Friday should be the confirmation. Following Friday, we should start to see whether there is an affirmation of those trends, slight changes in trend. We'll see what happens here. Okay, so this is pre-recorded. So the future's only up 10 in the Dow, up 175 in the E-mini, S&P E-mini. And what I'm looking at right now is I want to move on because I had a question about crude oil. Let me just double check here. Another questions. Yeah, crude oil trading right now. I'd shown that it's up 63 cents. It's in this high level consolidation. I'm going to do the weekly chart and just show you. In fact, I'm going to make the weekly chart an oval formation. It's not exactly yet a full oval. It needs more time. But I'm just going to say there's a chance right here that if crude oil closes above the high of the week of the 24th of November in the continuous contract, about 59.05, I'm actually going to say if it closes in the 60s, that's going to be very important because that's going to impact the monthly chart, and it's going to suggest that the monthly chart is made this H to M. It's actually really more like a large arch formation, and this is the pattern I drew for crude oil. I said it could go from that to that. And if it does that and it starts to trade in the 60s, something else is going on in crude. And then you've got to be looking at, I'm trying to give a big picture here because it's such an important session. It's with the Fed coming out. The big picture says that if the airline, the ARCA airline index trading at 114.71 right now, having made that peak D on the 4th at 117.02, if it takes out 112 support in the next 3, 4, 5 sessions, closes under that, that's going to say, uh-oh, a little difficult for now to go much higher. But if it closes above 118.20, it says, no, we're doing fine. And that's going to be the parameters that I'm looking at. And look at this. There's the H pattern that can become a very positive U formation. I love this U formation. Don't U formation me, baby. Okay, you've got an H pattern and you've got the U formation. U formation. Okay, so watching that. So a lot's going on, and a lot's going on because if we look at the IWM, the Russell 2000, look, it's at an all-time high at peak C. That is so unusual. Not to go to a D. Yeah, I could give it an alternate count, but I can't really because F, G, H, there's no H. This is a C. It says somehow or other it needs to get to a price point above 155.41 to get to that D, or else it's a failure at a peak C. Very unusual. And then the weekly chart is at a B. Now here again, there's no other ways to count it. It's at a B. But you know what? In a weekly chart, B can drop all the way to the 142 level and then make a screaming move up to the 56s for the leg C. So that's not as important as this one here. So I have a couple of things that are not quite working out, but almost everything else is. NYA, question about NYA, New York Stock Exchange. Yeah, that's gone to a D. It didn't make a new high yesterday. And there are just so many things that are saying the market is somewhat overbought. Look, the stochastics is 76%, not good. The MACD is strong. Not as good as it was back when it made the highs of 12,443 back in October 23rd, but the MACD is acting well right now. So I think that this is going to be a potential inflection deflection point. Why? Because if there's great news and all of a sudden on Friday at the close, the weekly charts are screaming to new highs, there won't be any stopping this bull market until January. If in fact we start the chop, which that's my impression, we're going to start chopping around, then the chop says you don't have to break down. Enough buying pressure is there to kind of keep the market holding quite nicely. Watch out for the first week of January. So I have two scenarios, and we're trying for my subscribers to look at those. Let me just look at the XLF for a moment here before we go to the break. XLF is the S&P financial spider leg E. MACD is good. Stochastic is confirming at 87%. We'll see what the Fed does to the banks, because look, Goldman Sachs had a spectacular day yesterday. It broke out in the weekly left side, right side price time match. Monthly is in leg B, and it's gone to a leg D in the daily. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Of course, if you're listening to me in the early show, the live show right now, stay tuned for wonderful Larry Pesavento. And if you're listening to me in the noontime show, the recorded part, then of course stay tuned for the wonderful Steve Rhodes and all the others. So let's just look at this. I'll just make it real simple in the remaining time. If after the Fed speak, the financials, the banks actually move up sharply, that's going to be very important. If they just kind of meander, it says something else is going on. If, in fact, the Dow is minus 45 or more, there's a good chance we've started a consolidation. I'm just calling it a consolidation for now. There are a lot of people still wanting to buy, but at the same time, we'll have levels to look at. If, in fact, the market is up 50 points or more, it says something else is going on. Be prepared for a choppy market, spiking up, pulling back, spiking up, pulling back. I think that the 24,500, 24,400 area is where we're going to be for a little while longer, just chopping around. That's just my impression. So I said Goldman Sachs is in leg D. Other things can happen at peak D. But anyway, that's going to be a good clue, because if Goldman goes to 263 on a closing basis today, that's going to be really positive. If it just kind of pulls back and goes to 255, 252, it says, hey, ho-hum, nothing to see here, folks. And that's the way it's going to be. But watch the bonds, the TLT. If the TLT breaks down and goes under, actually sharps, it goes down to 1.5. In other words, goes to the low 125s. It says yields are going to go higher. Watch this particular pattern here. Watch the 5-year, watch the 10-year, watch the 30-year. And if the 30-year moves more than the shorter term, it says, hey, This is going to be a real fascinating time for yields. But if the 5-year actually spikes on a percentage basis, it goes even higher, it says, hey, that flattening of the yield curve is going to be way more important. And then also watch the home builders. So I think we've covered a chunk of stuff. The crude oil, maybe it's on its own right now. That's the way I'm looking at it. You've got stocks like a Macy's. I didn't do that. I want to do. Macy's is holding very nicely. Watch the retailers, and Tesla's had a big move up. It's going to be some of the speculative stocks that we're looking at, and there's some of the Macy's that say we'll do more on that tomorrow in the show. But in the meantime, this is going to be a very important session, as far as I'm concerned, for clues as to December and January's move. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.